All right, welcome everybody to this week's client support webinar. My name is Bennett McDowell with traderscoach.com. Today is August 9th, 2023. All right, booking right along here. I'm telling you, you're gonna blink, it's gonna be Labor Day. All right, hope everybody's doing good. Please type in questions you have for me today, because this is really what this webinar is all about. This is your webinar, not mine, okay? This is one that you come here, and if you have questions, feel free to ask them, okay? Because I can actually then show you here and answer your question actually by visually showing you, probably on a chart or something like that. So definitely type in your questions in the questions window in the webinar software. That's how you can communicate with me, and then I'll see those and get to them, okay? All right, so let me go through the administrational items I have to as well. First thing to talk about are the risks involved in trading. We want you to know that we deal in a realm of probabilities. Sometimes we're right, sometimes we're wrong, right? So you have to protect yourself against those times you're wrong, and you do that through trade size calculations, which is the same thing as position size, how much you're going to lose. You should know if the trade fails, you should know before you enter that trade what the loss is going to be. All right, you just don't wing it. All right, you need to know before you go into the trade, and we show you how to do that. I've got books on that. I've got courses on how to do that. I got software that will help you do that. So that's something that's very easy to do. All right, so you should be doing that on every trade. And then of course you want to protect your overall situation with trading with only money you can afford to risk, because there's two types of risk. There's market risk and there is also trade risk. Does anybody know the difference? Just out of curiosity. Anybody know the difference between market or trade risk? Market or trade risk. Going once, going twice. All right, so market risk basically is things that we don't foresee happening. They can be something like, a terrorist attack. Remember when that happened, all right? And the markets just, got devastated. There's no stop in the world that could protect you sometimes against market risk events. So you always have to use money you can afford to risk in the markets. That's why even, with professional traders, we're not trading all of our net worth, because we realize that there's some events that can happen that cause markets to gap, and they can gap way past our current particular stop, right? So you got to protect yourself. And for the rest of the time, for the normal stops, you do want to do your use a stop exit on everything, and also calculate your trade size. So 99% of the time, you're not going to have a market risk event, but that 1% of the time it happens, you want to be able to protect yourself with money you can afford to risk in the markets. Also, too, check with your financial advisor or your money manager. Be sure that you're always trading within your parameters, because we don't know your personal situation, they do. Okay, so definitely check with them. And then finally, okay, let's see what else we can say here. Past performance does not guarantee future performance. I think we know that. And then if you need any books to help you with the risk control aspect, we got the Money Management for Traders and a Trader's Money Management System available. My newest book is the Money Management for Traders. And now I'm really excited because I'm working on this Art of Trading 2nd edition book. And this is going to be the best book I think I've ever written. It's going to have some really key concepts in there, and also too a lot of information about the markets now, and also the newer software that we've come out with since our first edition. And then I've got the Elliott Wave Technique Simplified and Survival Guide for Traders. Software, here it is. Now, some of you own all of it, some of you own some of it, and maybe some of you own none of it, okay? But the point is that you can get this at any time. You can buy it a la carte, you can buy it as a bundle, doesn't matter. And it's available on our website. If you're on an email list, you'll get updates on that as well there. So definitely check that out, and please have a set of trading tools that you can use, like a cookie cutter approach on any market, any time frame. That's what these can do for you. All right, left brain, right brain, we won't cover that today. We covered that last week. Okay, so here's TradeStation, here's Ninja. Okay, notice I have 3 charts up of basically the same symbol on both of those platforms. So whether you're using TradeStation, you'll always see 3 charts up of different time frames. That's called multiple time frame analysis. If you have any questions on that, feel free to ask as well. All right. So Lowell is asking me to look at a bunch of stocks. So Lowell, let's have a little chit chat first before we jump into those. What are you doing with those? Okay, he wants me to look up KR, KTOS, ARNC, and RKT. So tell me what you're thinking, and I'm not going to let you off the hook that easy and just do all the work for you. I want you to tell me why you're interested in these and what you are looking for me to tell you. Okay, little different format here. And where did you hear about them? Okay, did your broker tell you to do these? Did you read them in a newsletter? Where are you coming with that? All right, anybody else? That's the only question. I got quite a few people here. I only see one question here so far. Don't forget, this is really your webinar. So if you have questions or an area you need me to help you with, feel free. Okay, you're holding KR. Okay, so Lowell, you're long on KR. So I'll look that up. And let's take a look at what's going on here with this one. So currently, with the pyramids here on this little move up since June, I don't know how long you've been on there, but that's looking pretty good. So you want your stop. I wouldn't get out of it, but I'd have your stop right under here, okay? Pretty mature trend here. You got a little bearish divergence. If it makes another high, I don't think it will. It's kind of like almost up here. So you technically really don't have bearish divergence. You just have a 3. I don't think we've come down enough for a 4. Let's check that just to see. Maybe we have, but let's double check it. Yeah, I guess you have. All right, so you came down enough there. So long is not a bad situation. I'm kind of liking it. All right, I don't think it's a bad one at all. So I think you're in good shape with that. I just want to make sure it retraced enough on that weekly chart before giving you the green light to continue to hold it. So looking good. Okay, that's looking good. So I would continue to hold that. Now, what are your intentions? Because this will also determine where you put your stop, right? All right, I don't know if you're going for a quick leg up based on the pyramids here. Maybe you got in here, maybe your stop's here, so you got a profit on the first leg. Or if you're trying to get above the all-time high, which will probably happen. All right, if this is a bottom here, all right, then you're probably in good shape for another all-time high, so you get above 65. But you're not going to reach that if you put your stop here. You'd have to back it out and keep it. I would keep it right around here in the 40s someplace. You know, maybe like back on in here or here. Okay. All right, thinking of wave 5 to complete. Yeah, so you need to move that stop down. You need to keep it below any type of pullback that you get on this. Okay. So for example, you know, let me just, this will be a good educational thing to talk about. So for example, let's just say we draw fibs from the recent high and the recent low, okay? So this is normal retracement for normal profit taking on this leg up. So for it to pull back here is completely normal if it's ready to pull back. All right, maybe it'll make another high and then pull back and we have to redraw the retracements. But in any case, we don't know that yet, okay? Is it going to come down or is it going to go down up a little further? Hard to say, but you want to keep your stop at this pyramid here below the profit taking area, okay? So if you're trying to make it above here, okay, then this thing is not going to keep, this thing is going to go like this, you know, on the way up. So you got to make sure that stop is far enough so you make it to the target. Is that clear? Okay. All right, so your bullish thoughts on the other. Okay, so you're not in the others, I take it, but bullish thoughts. Let's take a look at KTOS. So I like KR, okay? I think that's pretty good. It's just stop loss placement becomes really important. That's all part of monitoring the trade. You know, there's 3 big aspects of trading. You know, you got to find the trade, right? Well, first of all, you have to have an edge. And, you know, that's what trading tools are all about. Then you have to know how to use your edge. You know, a lot of people buy software, but they don't know how to use it. They got to learn how to use it, right? So that gives you your edge. And then you got to find the markets. So that's a form of scanning, right? And then you've got to manage the trade. That's a form of many concepts: risk control, stops, how you're going to place your stop, and what your intentions are, where your target is, right? So is your target super high and you're going to have to be in this trade and survive those pullbacks? If that's the case, then you got to be very careful on where you put your stops, right? So all that has to be taken into consideration. That's under trade management, just as important as entries. All right, well, you got a bullish scenario going on here. Very similar, right? All right, so this is good. You got green here, you got green here. And how did you find these? These are actually good. All right, scanning. Oh, so you use the scanning tools. Good job on this. Okay. So looking pretty good on this one. You got a fairly decent pull up already off the bottom. I like that. Let's just take a look at this weekly thing. Now, here's the situation here. You know, if this continues to go up and take this high out, that's a really good sign. Okay. But also, too, you got to be a little nimble because you may get to this inflection point here, have a pullback in here. So probably keep your stop somewhere under this pyramid here. And if your intention is to hold this for a long time, meaning years, that should be okay. If you're trading short term, you got green here, green here. I don't know exactly where you got in, but you're a little late to get in short term. Too many pyramids. So even though it's got a green, the problem is that this green is only sitting here above, a little above a 17. Probably could take a scalp trade on it, but that's about it. The problem is I just don't know when the pullback is going to come for a short-term trade. So, you know, you've been going up since this entire year. So it's very possible at any time you could get a pullback. And of course, that's going to stop you out on any appropriate short position trade, right? Or long position trade, rather. Okay. So kind of be careful about that. All right. All right. ARNC. So KTOS is good for a long-term trade, not so good if you're doing a position trade over the next month or so. All right, same thing with this. Look at the 60-minute chart. Look how many pyramids in a row, okay? So, and look at the bearish divergence. So any entry here is going to be risky at this point. Now, would have entry been here better? Yes. Here, no, okay? And that's because this is getting ready to pull back. So I would wait on that one. Also, too, you got a red PTF. This is causing me concern on the weekly chart. That's indicating that this may not be a bottom, and we don't have a lot of history on this stock. Not my favorite, so I would not do this one at all, okay? RKT. All right, not much history on this one. I like this one better than the last one, though. And I see more bullishness on this one as well. So I'm okay with that. Flexion point for this is going to be between here and here. So you could get a pullback here. Let's see what we're thinking for a target on this. Where is this going to go? Well, we don't know if it's going to make an all-time new high, right? We just don't. Because there's not enough of an Elliott wave to help us with that. We're not getting anything there that could tell us that. Let's just see what a possible retracement here, long-term, maybe 20 bucks. So you could double your money on this. So I'm thinking this is not so bad. I'd put my stop here. I don't know if it has options on it, but if it does, maybe an option. Actually, here, you can put your stop here. About 8.5 bucks. Okay. Risk to reward's not super great, but you can use an option on that. Okay. Anyway, they're all pretty good. You did a good job finding them. Some are just going to be better than others. Okay. All right. Let's see what else we got here. Let me cook here. JP, let me go to yours. Alexander, I see your question. I'll get to yours as well. EQX. All right, this is for JP. JP, how are you doing? All right, he's long since 113. So you've done pretty well on that, right? Okay. I'm thinking I'd keep it. Okay, I'd keep it. You might get a little pullback, but I'd keep it. And the reason I'm saying that is you got green here, which indicates eventually a high above 13. You're gonna have to wait a couple years for that though. But this is green down here, and that's short term. So that shows we should get above there in a week or two. Now we have a little bearish pyramid here, so we're kind of pulling back here a little bit. But with the PTF remaining green on the 60-minute chart, as long as that remains green, that's just signifying a small pullback. So I think maybe keep your stop at least under here, okay? All right, 320 is your initial stop. Well, that's plenty. Okay, you got it down here. You'll be fine. All right. I just stay with that, okay? Don't even move your stop. Keep it there. You'll be fine. All right. Okay, let's see what else. My pleasure. That was good, JP. It was very detailed. I like that. All right, Alexander. Question on how to use the trade size calculator. The videos on the TC website are all about the risk reward, same thing. I have the trade size calculator. The difference between the two is the dollar risk instead of the percent. What do I enter to dollar risk? Actually, let me bring up the risk to reward calculator. And you correct me if I'm not understanding your question correctly. Okay, so here's the risk to reward calculator. So on the trade size calculator, you have everything here like this. The only thing you don't have is this, okay? So the question is, the videos on the TC are all about the risk reward calculator. Actually, we have videos. There should be videos on the trade size calculator. If you click on the number question mark on the help, they should have videos specific to the trade size calculator. I don't think they've been replaced. The difference, okay, the difference between the two is dollar risk instead of percent. So dollar risk instead of percent risk. Is that what you're saying? It's the same thing. Dollar risk is down here, okay? That's going to show you the amount of risk. So that is not probably on the trade size calculator, right? That was a function of the risk to reward. Okay, so what do you have here? If you enter the percent risk, that's the same, right? The entry and the exit. You should get the trade size. And what about this? Do you have cost of the trade or the dollar risk? There is dollar risk. Okay, so you do have that. I thought you said you didn't have that. Okay, so when you say, for example, when you take a trade and you calculate, let's just do it, okay? Let's just do one here. I'll show you. All right, let me switch it to stocks from futures. And I'll just use a $50,000 account. Keep it generically simple and kind of realistic. So let's say I want to go in on this trade here. Let's say I want to go in. The price is $4.85, right? Okay, so well, let's put our stop at the bottom of this little pyramid here. So let's bring up the show data box. We'll bring that over here. And the bottom of that pyramid is $4.44. So where should the stop be? This is for everybody. What should the stop be if the bottom of the pyramid price bar representing the bottom of the pyramid is $4? Whoops, I was wrong. $4.33. What should the stop be? So if the bottom of the pyramid, 432, JP, excellent. See, all that coaching paid off, right? All right, 4.32, you demand. Okay, correct. All right. So now if I hit calculate, all right, it shows me 1,888. And if I get stopped out, I'm going to lose this amount, which is nothing more than 2% of the account size, right? So they're really the same. It's just giving you it in the dollar format. Okay. So why don't you enter those, Alexander, go ahead and enter that exact trade, duplicate what I did, and see what you get. Now, one thing that's interesting here, sometimes, when you're typing, if you have big fingers like I do, I type a comma instead of a decimal point, or a decimal point instead of a comma. If you do that, it's not going to work. You're going to get nothing. So always make sure you don't have a typo in there. I'm notorious for typos. I'm like the worst typer there is. I kind of henpeck. My wife's like, but I'm more like click, 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 click. All right, so there you have that. Okay. All right. Now, margin. So the margin, and Alexander, this is covered in the instructions, just so you know. But the margin, basically, when you're dealing with the stock portion of the calculator, is the margin that your broker is allowing you. Now, if you have a margin account, then you have to know how much you can borrow. So let's say the broker says, okay, you have a margin account, you can borrow 50% on the securities you have in there. Okay, good. So then you want to put 150. If it's an all cash account, then you put 100. I have 150 in there, see? And just so you know, he's talking about this field here. All right. So if your broker says, I'm only going to give you 30%, loan 30% on your stocks, then you put 130. So the starting value is 100. That's for an all cash account. Okay. You got it? Just want to make sure you got it now. So the margin is something not really you decide. It is something that the broker, you'll know by the type of account you have with them. Now, if you're dealing in futures, okay, then the margin is something, again, you get that margin fee from your broker. So for example, if you're trading something like the, S&P MES contract, the standard margin's 350. Now, if you're day trading only and you have a history with your broker, they may lower that margin amount for you. Okay, so it depends. So the margin amount for futures varies actually from individual to individual, just like the margin amount on stocks, because some people with really good credit and really good, a long time account holder may get more margin than somebody brand new, right? All right, so that will vary, but that's usually set by the brokerage. And if you don't know what your margin is and you're trading futures, then you go to the CME or whatever exchange you're trading, and they'll have the overall margin accounts. But some brokers are a little more strict than the exchanges. So just kind of know that. All right. Cool. Good. I love questions. Alexander, very good. Because I guarantee you, there's probably 3 or 4 other people that had the exact same question you had. So thank you. There's no such thing as a bad question. No such thing. All right, anybody else? We got a few minutes left. I try to keep these to about a half an hour. Kind of don't want to overdo it, so to speak, but by the same token, half an hour gives you enough time to kind of cover a couple things. Is everybody good out there? Did I answer questions okay today? If something needs more clarification, feel free to ask, okay? All right, so you are long. Okay, all good here. Good. All right, so XOM, which is Exxon Mobil. Let's see what's cooking on that bad boy. And you are long on this one. Okay, so we got a couple little issues coming in here. I'm showing a red PTF here. Okay, so in kind of a sideways market here. Got a little bit of a red owl here. So have you been in this a long time? And if so, If you don't mind me asking, when and where your stop is. When I have a red PTF and I'm long on something and I have a bullish forecast, but if that PTF's red, that means we're going down versus going up. Doesn't mean eventually it won't go up, but we're going down first. So you got to, you got to be careful with that. Okay, so about 3 months. Okay, so you had it before art. Okay, so I got to tell you, are you in profitable territory now? Because you might be. No. May I ask what price you got in? Give me the, okay, about 113. I've been writing call options. This was assigned to me. Don't you just love that when that happens? I'll tell you a quick story on options. You got to be, I used to love to write covered calls. In fact, if you go back 30 years, I was writing covered calls all the time. The only problem with covered call writing is that what I was looking for is high volatility stocks because they always produce the larger premiums, right? And in writing covered calls, that's what you want. That's how you increase your income. So I was looking for stocks near their lows, bouncing off the bottom, and writing covered calls because I wanted the stock to go. I actually wanted to get called out and make a profit on the call out and a profit on the premium, right? Well, it only takes a few bad trades to kind of screw up that whole thinking, because if a stock is what you think at a low, but it decides to go lower, it cuts into your profitability quickly, all right? So sometimes you can get screwed doing that if you're not careful. So you also have to have an exit policy. I found out really through trial and error that you better have an exit policy. So if you're wrong and you're not at an all-time bottom or whatever you think it is, that you get out, because the problem is if you stay in that stock, yeah, you'll make money on the premium as the covered call expires worthless, but you'll start losing big bucks on the stock if it starts really bolting down, which ruins the entire plan. So you got to get out of the stock, even if you have to unwind things at a loss. It's better to take that loss quickly and salvage the rest of your cover call premium profit, right? That's my, that's my thoughts on that. But I like covered call writing. All right. So so on this one here, you could get, the problem is it's a mature trend on here. All right, now I think probably it's very possible to get around 80 bucks on this on the next major sell-off. Are we there yet? Could be. Okay, this is red. This is red, looking like it's going into a wave 4. And let me just draw in the wave 4 retracements. I don't want to tell you what to do. You have to make your own decisions. Okay, but it's very possible if this is in a wave 4 to get down to 86 to 65 bucks. All right, so probably maybe put your stop under here or under this pyramid here and see if you can make a little bit more profit, or at least maybe a break even, and then try to get out. Okay, with a red PTF, you kind of want to look for an exit strategy here. Okay, does that make sense? All right, let's check out your other one, MARA, Mara. Okay, so this one is pulled back. We kind of expected it to. This one's better than the other one simply because, let's just see, well, kind of. This is green, This is about to go red. So this gives me at least confidence that this high is not the last high. That's good. This is red. This is red. This tells me we're probably not done correcting, that we're going to go down here before going up here. So when the lower time frame has a PTF that is a different color than the higher time frame, that means the market will move in the direction of the lower time frame first before it can satisfy the longer time frame PTF. Okay, so that's kind of what we're looking at. So this one, if you want to hold it, you should get a eventual bottom on this pullback, but you know, it could go down to 12.82, 12 bucks and 82 before it bounces up. Okay, so that's possible, but it should bounce up. So the probabilities are at least in your favor. You're just going to have to suffer more of a pullback until that happens. And again, I don't know where you got in on this. You know, if you're a slight profit now, and you wanted to take profits and then wait for the correction to end and get back in, that way you know, if it's a deep correction, you can get in at a better price. If it's a shallower correction and just goes down here and reverses, well, no harm done anyway, because you can get back in. So that type of thing. Okay. So you got in less than 12. I probably would maybe take some profits on this. I don't think the correction's over, but I'm gonna let you decide. You know, sometimes I'm wrong, so you have to make your own mind up. I go with the probabilities, and no matter who you are, sometimes you're going to end up on the wrong side of probabilities. That's why they're probabilities, no matter who you are. Okay, so you have to make your own decision on that. Maybe take half off now, whatever makes you feel comfortable. But with the red PTF on the 60-minute, there's a chance that it's going to head back down. That's basically what I can tell you. Okay, I think I've got them all. Hopefully I helped you guys. And that, you know, it's good because when people ask questions, it's an education for everybody, right? Everybody can learn something. All right, well, that's it, I guess, for this week. All right, thank you for the great questions from everybody today. Really appreciate that. That fuels this session and all the sessions. All right, I appreciate it. Alexander, my pleasure. All right, and thank you, JP. Good to see you again here today, and as well as everybody else. So have a good one, and I will be back next Wednesday. Okay. So I did record these. The recordings are, you know, are in our YouTube page. Please subscribe to us, okay, on YouTube. I think you'll get a kick out of it. Also, too, just so you know, the client supports are hidden on YouTube. So you have to go in through a special link in the client support area because we like to keep these private for you guys only, okay? All right, see you next week, everybody. Thanks so much. Bye.